You're watching a small loss on your funded challenge. It's no big deal, totally manageable. Your trading plan, the one you spent months building and backtesting, says to close the trade, take the small hit, and just wait for the next setup. But then a voice pops into your head, a quiet little whisper that says, I can make it all back on the next one. So you take another trade. And just like that, the account's gone. A rule violation email hits your inbox. Dream over. Look, that's not a strategy problem. It doesn't mean you're a bad trader. It's a brain glitch. A predictable, repeatable short circuit in your brain that fires off when you're under pressure. And today, I'm going to show you the exact moment this glitch gets triggered, explain why it's not really your fault, and give you a system to shut it down before it costs you another account. Let's get one thing straight right away. This glitch isn't some character flaw. It's biology. For thousands of years, our brains have been hardwired to survive. When you face a threat, a little part of your brain called the amygdala completely takes over. That's your fear center. It hijacks the logical, rational part of your mind, the prefrontal cortex, and pumps your body full of adrenaline and cortisol. It's the classic fight or flight response. In the wild, this saved our ancestors from being eaten. In the markets, it eats trading accounts for breakfast. Here, the threat is just losing money. And because of a powerful mental bug called loss aversion, our brains feel the sting of a loss about twice as much as the joy of an equal win. So, a $500 loss feels as bad as a $1,000 win feels good. Your brain doesn't see a small drawdown as a business expense, it sees it as a direct threat to your survival. I remember my fourth funded challenge like it was yesterday. I was up 3% on the week. I felt like a genius, like I'd finally figured it all out. Then, a Thursday afternoon trade during the London session turned against me. It wasn't a disaster on paper, it was less than a 1% loss. But it didn't feel like 1%. It felt personal. It felt like the market was reaching into my pocket and stealing from me. My plan, my written, tested, and trusted plan had a simple rule: 2 losses in a row, and I'm done for the session. This was just the first loss. The smart part of my brain knew exactly what to do. But the glitch was already whispering. It's just a pullback, it said. There, just stop hunting. Don't be a sheep. Hold on. It has to reverse. And that was it. That was the moment my rational brain got shoved in a closet, and the glitch took the wheel. This leads us to the single most dangerous moment in your trading day. It's that tipping point where a tiny, recoverable loss snowballs into a blown account. And that moment is the impulsive decision to ignore your daily loss limit. That daily drawdown rule from the prop firm isn't just a number, it's a psychological tripwire. Let's walk through the fatal spiral, and I want you to be honest. How familiar does this sound? It all starts with that one unexpected loss. The pain from that loss, supercharged by loss aversion, creates an urgent need to fix it. This is revenge trading. It's not a thought-out decision, it's a gut reaction to pain. You feel like you have to win that money back right now to make the bad feeling go away. So, you jump into a second trade. This one is almost never in your plan. You see a flicker on the chart and you're in, probably with a bigger size, because you're not just trying to win anymore, you're trying to instantly erase the last loss. This is one more trade syndrome, and it's in full swing. But because this trade is unplanned and fueled by emotion, it starts to go against you too. Now your small loss has doubled. The red on your screen gets bigger and brighter. As you get closer to your daily drawdown limit, the real panic kicks in. Your heart starts pounding. Your hands might get a little sweaty. Your prefrontal cortex, your rational brain, is completely offline. The amygdala is running the show. This is the point of no return. You're in pure survival mode. The voice in your head is screaming that hitting the daily drawdown is the ultimate failure. And to avoid it, you do the one thing that guarantees it happens. You delete your stop loss. You tell yourself, it just needs more room to breathe. I'll wait for the reversal. You're not trading a plan anymore. You're gambling on hope. But the market doesn't owe you a reversal. The price keeps falling. A few minutes later, you get the email. Rule violation. Daily loss limit. The account is gone. What started as a tiny, meaningless loss turned into a complete disaster, all because of a predictable psychological chain reaction. The stats are brutal for a reason. It's estimated that up to 90% of traders fail, not because their strategy sucks, but because they can't control this exact emotional spiral. If this story, this whole downward spiral, sounds painfully familiar, do me a quick favor and hit that like button. It's a way to acknowledge this is a real struggle we all face. It helps the video find other traders who are stuck in this loop and shows them they're not the only ones. Alright, now let's talk about how to fix this glitch for good. You can't fight this brain glitch with willpower. Trying to be more disciplined when you're tilted is like trying to win a shouting match with a hurricane. You will lose every single time. The key isn't to become a robot, it's to build an antivirus for your trading, a set of hard rules you create when you're calm, designed to protect you from yourself when you're not. This is how pros survive. They don't rely on being emotionless, they rely on their systems. Here are 4 practical rules you can set up today to act as your antivirus. 1. The circuit breaker rule. The stock exchange has circuit breakers to stop a market panic. You need one too. This is your personal daily loss limit, and you set it below the prop firm's official limit. If their daily drawdown is 5%, maybe your personal circuit breaker is 3%. The second you hit that number, you're done. No questions asked? Close the software, get up, and walk away from the screen. This physically stops the emotional spiral before it starts and keeps you from ever getting close enough to the real limit to panic. 2. The 2 strikes and you're out rule. This one is simple but incredibly powerful for stopping revenge trading. It's not about the money lost, it's about your state of mind. If you have 2 straight losses from trades that were unplanned or emotionally driven, you stop for the day. That's it. The first loss is information. The second one is a pattern. By stopping, you recognize that your decision-making is compromised, and you prevent that pattern from blowing up your account. 3. The lock in your wins rule. Nothing fuels panic more than watching a profitable day turn red. You feel like the market is taking money that was already yours. Trailing drawdowns are especially nasty for this. So, the rule is simple: when you're up a nice amount on a trade or for the day, take some profits off the table. Turn that floating P&L into real, locked-in gains in your balance. It lowers your emotional attachment to the trade and makes it way easier to stick to your plan if things turn. 4. The pre-flight checklist drill. A pilot never takes off without running through a pre-flight checklist, even if they've flown that plane 1,000 times. Treat your trading sessions the same way. Before you even think about placing a trade, do an emotional check-in. Are you tired? Angry? Distracted? Feeling like you need to make money today? If the answer is yes, you are primed for the brain glitch to take over. Writing these feelings down makes you aware of them and takes away their power. When you're not in the right headspace, the most profitable trade you can make is no trade at all. For years, you've probably blamed your strategy. You've hopped from system to system, looking for some magic indicator that doesn't exist. But the real reason you're stuck isn't your entry signal. It's the predictable brain glitch that hijacks your rational mind and convinces you to break your most important risk rules when it matters most. Winning at this game isn't about finding a perfect strategy. It's about building a fortress of rules around the one you have. It's about accepting that pro trading is a business driven by process, and frankly, that process can be pretty boring. The first step to fixing this glitch is dragging it out into the open. So, in the comments below, share one thing. What was the thought or feeling that went through your head right before you broke your rules on your last blown account? Let's create a space where we can be honest about this stuff. Don't forget to subscribe for more deep dives into the psychology that separates the 99% who fail from the 1% who succeed. Trade smart, respect your rules, and I'll see you in the next one.